Welcome back to Alpha Recap, your aftermarket wrap from stockalpha.ai. We're unpacking the big themes from today's tape, and as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets had an interesting tone after the close. Risk appetite improved, geopolitical headlines calmed, and yet some AI-linked names still had sharp, counterintuitive moves. Lots to get into.
Right, so quick snapshot to start. Vertiv beat expectations and nudged its 2026 outlook up, but the stock finished the day down. A great example of narrative versus price. At the same time, we saw a cluster of Form 8K filings that added corporate-level risk to the mix.
And Tesla kicked off earnings season, which set an early tone for big tech and AI sentiment. Apple's leadership change also showed up in the conversation. More on that in a bit.
Let's dig into Vertiv first. The company reported a beat, raised guidance a bit for 2026, and still sellers came in. So, what really stands out here is how investors are parsing guidance and valuation, rather than just the headline beat.
Exactly. Analysts said the beat signals continued spending on AI infrastructure. Think data center power, cooling, racks, and networking. But the market reacted to nuance. Timing, margin sustainability, and which product segments drive near-term revenue were all questioned.
Wait, really? So a beat wasn't enough? Is this mostly valuation-driven profit-taking, or is there real concern about execution?
Both camps exist. One view. This was profit-taking in richly valued AI supply chain names. The other. The guidance bump was described as slightly higher for 2026, which underwhelmed investors who had baked aggressive growth into models. I mean, when you step back and look at this, beats don't guarantee upside anymore if forward details disappoint.
Short reaction.
Not what anyone expected.
Good little reality check. Now, the second big theme was geopolitics. The morning brief flagged a reported ceasefire extension, and that eased a major macro overhang. In practical terms, markets closed modestly higher as commodity volatility and a defense premia eased.
Right, and analysts pointed out that lower geopolitical risk tends to tighten risk premia and reduce hedging demand. Cyclicals and risk-sensitive tech stocks benefited from that backdrop, at least in sentiment, if not uniformly in price.
Short reaction.
Big move.
Let's talk SEC filings. There was a steady stream of Form 8Ks today, items ranging from material agreements to unregistered equity sales and Regulation FD disclosures. Some specific filings were highlighted, like Omneal's accession number 000-119-3125-26-168231, and Alarity's accession number 000-121-3900-26-046411.
Yes, and Raphael had accession number 000-121-390-26-046380. AT&T was 000-0732717-26-000201, and GE Vernova and Old National were also on the list. Analysts reminded investors that those accession numbers are anchors. Open the exhibits, read the linked materials, because the real detail is often tucked into the attachments.
For listeners who don't live in filings, what should they be scanning for in an 8K?
Great question. Items to watch are Item 2.02, which is Results of Operations, Item 8.01, Other Events, and Item 9.01, Financial Statements and Exhibits. Those sections can contain definitive agreements, revisions, or short but material disclosures that don't get a press headline.
And there was a call-out that Omneal flagged, a material definitive agreement and unregistered equity sales, which could mean dilution and liquidity changes. So for income or value investors, those are immediate items to read.
Unregistered equity sales can be an early signal of near-term dilution or financing needs. Old National's Item 2.02 Results of Operations filing also matters for regional banking trends. Those bank filings can move dividend and capital assumptions.
Short reaction.
Read the exhibits.
Switching gears, earnings season context. Tesla opened reporting, and that helped set expectations for big tech commentary around margins and AI-related product updates. And that brings us to Apple, which got attention today for appointing a new CEO described as a hardware legend.
Yeah, that tracks. Analysts agreed the leadership change is strategically important, but not determinative. One key point: hardware pedigree matters, but platform AI leadership usually needs large-scale data, cloud services, developer ecosystems, and sustained software investment.
And for context, Apple's market footprint is massive, about $4 trillion. So any pivot there has big market implications. But execution and timelines will drive outcomes.
Right. Skeptics pointed to historical examples like Intel, where hardware dominance didn't automatically translate to platform or software success. Optimists say Apple's device ecosystem still gives it a leg up, but honestly, I was a bit surprised by how much debate that leadership change stirred.
So where analysts agreed and diverged? Consensus that the ceasefire removes a near-term overhang. Consensus that 8Ks are worth reading. And split views on Vertiv and on whether hardware pedigree maps to platform AI. That split matters because it affects positioning in AI-adjacent names.
And that split showed up in price action. Vertiv's post-beat sell-off became a case study. Some saw profit-taking, others saw guidance that didn't match the aggressive assumptions in models. The takeaway? Forward-looking detail can outweigh headline beats.
Let's get practical. What this means for different investor types. Long-term investors should focus on execution and timeline questions. Order book visibility, margin sustainability, and customer concentration for hardware suppliers. Analysts note those are the durable drivers.
Growth-oriented players will note that the market punished a beat lacking robust forward guidance. So, data suggests volatility will remain in AI-adjacent names as investors reprice how quickly cloud spend translates to vendor earnings.
Value and income folks need to look at bank and telecom filings. Old National, AT&T, because items like unregistered equity sales or sudden operational disclosures can affect distributable cash and dividend calculus.
Event-driven and activist investors will find the 8Ks especially useful. Accession numbers and exhibits can reveal definitive agreements, financing terms, or governance clauses that are actionable. Traders and quant players, meanwhile, might see volatility-based opportunities given inconsistent reactions to earnings beats.
So here's a short watch list analysts suggested. First, read the exhibits for every 8K called out. Alarity accession 000-1211-3900-26-046411. Amneal 000-11933125-26-168231. Raphael 000-121-3900-26-046380. AT&T 000-0732717-26-000201. Open the PDFs.
Second, monitor early earnings cues from Tesla and the rest of big tech for margin commentary and AI-related product signals. Third, track positioning in the AI supply chain. Vertiv's case shows guidance tone and margin language matter. Fourth, stay aware of capital structure notices that could imply dilution or refinancing.
And fifth, keep geopolitical flow in view. The ceasefire extension lowered one macro overhang today, but such developments can reverse, so risk managers should watch follow-on diplomatic and commodity market reactions.
All right, some quick clarifications for listeners. When analysts say AI infrastructure, they mean a broad set of physical and systems-level products: power, cooling, racks, networking, not just GPUs. And when we talk about guidance nuance, the market is increasingly sensitive to not just revenue beats, but margin and revenue mix detail.
Yeah, and to repeat a very important point, analysts note that 8K items like item 2.02 and item 9.01 can contain material information that doesn't get a press release. So if you want to understand near-term changes to capitalization or obligations, the exhibits are fertile ground.
Final reactions. I think today's tape was a study in nuance. Macro tailwinds from calmer geopolitics, but company tapes that are being judged more finely. Beats matter, but guidance tone and execution cadence often override short-term fundamentals.
Yeah, absolutely. For listeners, key takeaways. 1. The ceasefire extension improved risk appetite and helped markets close higher. 2. Vertiv's sell-off after a beat shows investors are parsing guidance and margins closely. 3. Elevated Form 8K activity means corporate disclosures could drive idiosyncratic moves. And 4. Apple's leadership change is important, but execution will determine whether hardware pedigree becomes a platform advantage.
And remember, analysts note these are observations and not personalized advice. This discussion is informational. We did not and will not recommend buying, selling, or holding any specific security.
If you want to dig deeper, our tip is simple. Open the exhibits, read items 2.02, 8.01, and 9.01, and compare the language to prior filings. Small contractual changes can be big in the headlines that follow.
All right, quick round of short reactions to wrap. Ready?
Go for it.
Nuance wins.
Earnings tone matters most.
Read the exhibits.
That's our recap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening, and we'll see you next time on Alpha Recap.